Oh boy, oh boy. Yesterday, Bitcoin dropped a few percent and right away all the moon boys came creeping out, all the Pensonex came creeping out saying, oh, we're gonna dump, and everyone was panicking. But at the end of the day, there's actually not so much going on. We did, however, hit a few of our levels. So today's video, we are going to look at Bitcoin again. If you like the content, please do me a favor, like, subscribe, click on the bell, click on all so you don't miss anything, leave me a comment, share this video with your friends if you think that's useful. Now without further ado, let's start diving in. I updated you approximately 2 days ago that this is actually really the macro idea right here that I'm looking at, is that we are going higher to that golden pocket and hitting that trend line, and then to go lower. And also we did not hit that golden pocket, so I did not take the short. Said if we are going lower, then I am looking for this area right here, 64 to 64,800 to long. That's the golden pocket, CME gap, and 78.6. We hit that level yesterday, but I did not long that level because I did not see my confirmations. Again, I update you here on Twitter. I also said it just earlier. I said I did not take the long since I had no confirmation. So let's head over to the chart. This is what we're looking at right now, Bitcoin on the 1 hour. When we hit the level yesterday, like I said, there were no confirmations. I did not see trapped short sellers. I did not see any bullish divergence. I did not see any bullish CVD. There were just no confirmations. I can mark all kinds of stuff on a chart. Once we hit the level and I see no confirmations, there is no reason for me to take the trade. Therefore, I did not pull the trigger on the long, and looking back at it, that was actually a good choice because we're just slowly grinding lower. I can take now the CME line off because that gap has been filled. And I also did not take the short here. So there's full transparency. Reason is very simple. We hit that point of control, that's that thick red line. That's the most traded volume in the entire area, once, twice, 3 times. Since we were also a little bit crawling up like this, I was actually hoping that we would break it. Everyone is getting bullish. Then we're hitting that golden pocket, retesting that bigger upper trend line. As you can see, we had that big triangle, and then eventually to then roll over, and this would be then my short trigger. If I would get into a short from this level, just hitting that point of control, I need to have my stop loss on a most logical way or level, so that it's not just above, because like I said, we can break out and then shoot back, but that actually needs to be above that golden pocket. So then I would have a stop loss of more than 2%. And I'm very sorry guys, but for my position size and the leverage that I'm using, 2% stop loss is way too much. Usually my stop loss is way under 1%, sometimes not even 0.5%. So my stop loss is usually pretty close by to my entry, because I like to trade in these very tight setups and ranges. So this short for me did not get triggered. We had a little bit of a drop to the downside, but to be honest, there's still not so much going on, so we do not have to panic yet. There are actually 2 opportunities for us to long in case you're still bullish. If I now pull the fib retracement all the way to the bottom that we created, then we have here the golden pocket right away lining up here with the value area low. And I would say that is also kind of a zone. Don't take this for a dollar more or less. So I would say that is then approximately, let's say, 62,000 to 63,000. I think that is a easy range. 62 to 63,000. That for me would be a nice area to long. For now, I'm going to take this off, and I'm just going to duplicate this. This will be the area, and then you just put your stop loss somewhere here underneath. And actually, really, the first target that you need to shoot at is that point of control. That will be then the TP1 and then the TP2. So this is already a 1, 2, 3 approximately. And TP2 is then your value area high, or to take out these highs, but I would take some out here at the value area high. Very simple, very easy. Would we break this as well? Of course, you can see if we can long from an S&P from this level. So what you then want to see is price dropping down, losing it, reclaiming it. That is your entry. Your stop loss is then right underneath your candle. That is pretty much it. And then you just let it ride to the upside. TP1 is then here your value area low and then your point of control. Also very simple, very easy. And under that we still have that bigger liquidity grab from 57,500. Sorry, 57,500. That could be a level. To be honest, guys, I don't know if we can get a long from this level right here. Yes, it's the very low. Yes, it is support. Yes, it is the golden pocket. But if I just look at Market Cipher B, we are pretty close now to that level, as you can see. But if I'm looking at Market Cipher B, this looks actually very, very bearish. Once we are hitting that level, you actually want to see this bottoming out. So you want to see the money flow already rolling over. You want to see something like this where the momentum waves are already rolling over to the upside, that everything is kind of bottoming out, pointing towards the upside. We're probably going to hit this level during New York Open, and then I just have a hard time believing that this then already cleared up. If I zoom out to the 4 hour, because I like to have my bigger time frames backing up my small time frames, this doesn't look at all that it is bottom out yet. This will need a couple more 4 hour candles. That means tomorrow, if we're lucky, it will bottom out. If I then look at the 12 hour, it takes a second, then you can see actually just pretty bearish. Momentum wave to the downside, RSIs to the downside, money flow into the red, VWAP into the red. That looks pretty bad. And also on the daily, we are now printing a red dot. If that gets confirmed after today, I actually expect more downside. Doesn't mean right away we're going to zero. No, absolutely not. We're just trading it from level to level. And we will take our longs and scalps, our long and short scalps along the way. But I wouldn't be all too excited from this first long that I here present to you. Would you therefore say, hey, we're going much lower, let's enter a short and let's just ride it to the downside? I would actually wait. I am right now not entering a trade. I want to see a little bit of a cleaner, better setup. So a possible short, and this actually it requires a little bit of experience. I'm just zooming in now to the 15 minute. Could be something like this, where we are taking out this high, or better yet even this high. We're going higher during New York, doing something like this, losing it. This is your entry right here. Stop loss is then above the high, and then just trade it to the downside. Yes, you need to take profit here at the value area low, but this actually could be, from a risk to reward side, a very good trade. Let's say we're doing something like this, stop loss above the highs. Look at that. Then you're pushing out a 1 to 7 or 1 to 8 trade. So you're risking $1 to gain $8. These kinds of trades, I love them, because these can really be runners, and people are not really expecting that we would retrace from such a local area, but then suddenly you see us rolling over and then we're just dumping down. A second option could be almost the same. You have these lows right here, right? I think that is pretty obvious. And if we do something like that, where we are going higher first, so price comes higher, tries to reclaim it, and eventually we're also rolling over, I would also short that. This will approximately also be like 0.5% stop loss. There you go, 0.5%, perfect. Then I will put my stop loss here. You can clearly see that this is support and resistance throughout a longer period of time. That actually would be a very nice trade. Also here, I would just trade it to the downside. So be careful for now. I would not just blindly step into a long or to a short. If for whatever magical reason the indicators are clearing up and this level right here looks juicy, I will try to take a scalp from that golden pocket. Maybe it just gives me 1% or 1.5 or 2. I'll take it. But for now, since we're looking at the bigger time frames, the indicators, we just bounce off the point of control. We couldn't hold it. We're close to the very, very low. Our macro bias should be lower. And only if we're really losing this level here of 57,500, then stuff can become pretty bearish. But for now, this is just a bigger range mode, and we're just trading it from the highs to the lows, from the lows to the highs, and that is how we make our profit. And eventually, the bull market will kick in again and we're going higher. But for now, we have to trade what the chart is giving us, and the chart is giving us a little bit of a bearish pattern. We have our high, we have our low, we have our lower high, so now we can expect that we are going lower again. Hope that this update was useful. If it was, then please guys, do me a favor, like and subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram. Both those links are in the description. And as you have seen, I'm very active on Twitter, so I will update you there during the trading day if anything happens. Thank you guys so much. See you in the next one. Bye bye.